What is Forex trading and how does it work? In this video, I'll explain you the basics. But before we do that, let me take you to the disclaimer and remind you that we don't provide any investment advice and all the material is made available for educational and marketing purposes only. So, in this video you'll learn why to trade Forex, what are pips, pipettes, points and fractions, how to read FX quotes and what is meant by leverage and margin, and you'll also learn some basic terminology. Starting with why trade Forex with TIOmarkets. There are at least 5 key benefits available for you. First of all, we are talking about 24-hour markets, so there's no overnight breaks. You know from stock markets maybe that each night the stock market closes for the evening and then opens in the morning. So if any significant news items come out in between this period during the night, then the market can have a significant price move and stop you out with much worse prices than you would like to. So that's not possible with Forex because the markets are open 24 hours and only close for the weekend. And the weekend risk you can manage by closing the positions for the weekend and then reopening them on Monday. Now, trading costs are really low with Forex. The cost used to be huge in the markets, but now the spreads are really tight, so you can run even very high frequency scalping strategies with, reasonable effectiveness if you know what you're doing. You are a newcomer if you're watching this video, I assume, so you don't have to know all these details yet, but over time you'll learn, and if you watch this video series, I will be teaching you what you need to know about Forex trading. Then the third major benefit is that you get free trading software and free price feeds. If you were trading futures, for instance, you would pay for the price feeds and the trading software separately. So it's a major benefit for you as a trader, so that you don't have to pay TIOmarkets for the software or the price feeds. We provide them for you. And then number 4, the margin requirements are really low. You can trade the markets with small deposits and you don't have to deposit on your account more than you can afford. So you can get a feel of trading and how the markets work with very reasonable risk. And then number 5, you get an easy access to Forex markets, commodities, stocks and stock indices. So all in all, this is a great package for you if you are looking to learn about the markets. Plus you also get a demo account so you can practice until you feel that you are ready to risk real money. Okay, what are pips, pipettes, points and fractions? Pip used to be the smallest measured movement in the markets and it refers to the 4th decimal in the USD pairs. And nowadays we have something else which is near the 5th decimal, basically called a pipette, or some people call them also points or fractions. And this applies to USD pairs. So for instance, we have Euro USD quote here. So the selling price is 0.99, 15 and 3. The 4th digital here is the pip. Then on the right hand side you have the buy price, which is 0.99, 16 and 3. Number 6 is the pip. Then you go to pound USD, and here I have an example of what pipette is, or a fraction, and it basically is the small number up here and it represents the 1/10 of 1 pip. So if you have a number 3 here, obviously that's 3/10 of 1 pip, or 0.3 pips. Japanese yen pairs are slightly different. So in yen pairs, the 2nd decimal is the pip. Here in the sell side, it's the number 3, and on the buy side is the number 4. And if you look at the JPY pairs, it's the third decimal, or 0.001, i.e. the small numbers up here, that are the fractions. You don't have to understand about fractions or pipettes. Most people refer to pipettes. Then how do we read FX quotes? First of all, buying in Euro USD equals to basically buying Euro and selling the dollar. And likewise, buying in USD Yen refers to buying USD and selling the Yen. And if we go to the markets where we're looking to sell, they're selling pound USD means that you're selling sterling or pound against the US dollar. And the same applies to other currency pairs also, like Aussie Yen, for instance, here. If you're selling Aussie Yen pair, then you are selling the Australian dollar and buying the yen, the Japanese yen. Very simple, isn't it? Then I want to briefly talk about the quotes. So, for instance, here we have Euro USD. And on the left-hand side, we have the base currency, and on the right-hand side, quote currency, meaning that we are quoting the price of Euro in the USD. So what does the Euro USD price or rate mean? It basically means that you have Euro priced in the USD. It's the cost of €1 in the US dollars. And the same applies to USD Yen also. So if you have a USD Yen quote, it's the price of, or the cost of $1 expressed in yen terms. So USD priced in Japanese yen. Then we talk about leverage and margin. Margin basically means this. The brokers require traders to have an amount of money on their trading account so that they can take trades. This is your margin. There is a margin requirement set by every broker, and it just means that it is the minimum amount that you can have on your account. Then the leverage means that the broker allows traders to borrow money so that the traders can take bigger trades. And it means bigger than they would ordinarily have money for. The broker, in this case TIOmarkets, finances your trading so that you can take bigger positions and benefit more from the markets once you know what you're doing. But you have to remember that with leverage, we have to be careful because it magnifies both the losses and the wins likewise. So you have to know what you're doing before you use the leverage, and there's a perfect way of getting to know what you are doing, and that's called a demo account. Just register with TIOmarkets.com and you will get an access to a demo account, and then later on you can open a real live account as well. Here's an example on leverage. Broker requires a trader to maintain $1,000 on his trading account so that he can take a trading position worth of 50k. This means that the leverage is 50. And then we finish off with some basic Forex terminology. We often talk about going long. This refers to buying a market. But then if you hear about people talking about going short, it means that people are selling before they buy. Obviously, you can sell to close a long position, but you can also sell before you have opened any positions, meaning that you don't have any positions on, but you're still selling. That means that you're shorting the market. If you are bullish, then that means that you have a positive view about the market. If you are bearish, then it means that you hold a negative view of the market. Then getting filled refers to the fact that you are opening a trade, you give an order, and then the order is filled. You get a confirmation that your order has been fulfilled at a certain price level. And then slippage means that if that order is executed at a different price level than that you specified, then you have slippage, which could be either positive or a negative. So slippage on its own isn't a negative thing or a positive thing, but the market can move, especially when the market is fast, it can move quite a bit, and then your fill price is different to your order price. This concludes our video on the basics. I hope that I see you on the next video. Thank you and take care.